And obviously, we didn't anticipate the news that hit the market today, but Friday was definitely an expectation breaker, prompting investors getting more cautious. And you're on mute.
Oh man, I already blew it. So
Okay.
yeah, so I mean, we got that reversal on Wednesday and things were looking good, coming down right to a level of support at the 21-day moving average line. We got the follow-up, that was nice to see. We got the shift in kind of sentiment where we were, maybe starting off a little bit weak, but we were closing strong. It's not how you start, it's the way that you close. But then, Friday really changed. And even though we didn't undercut the lows of the Wednesday rally, the reversal, that would have really kind of killed that. The fact that we did close back below the 21-day moving average line, I think did call into question whether or not this rally was going to work. So now on the other side, you have the S&P 500.
Right.
That did undercut the lows of the Wednesday rally. That was looking a little bit more in trouble. And I'm sorry. I thought that it. Oh yeah, there we go. Okay, I was looking at the wrong day because I'm like, I could have sworn it did undercut. Yeah, and not only did it undercut the lows, but it also closed below the 50-day moving average line. And so, and look, there's been weakness there. A lot of things that have been looking like they were setting up, we're just kind of struggling. There were things that were holding up, so I think it was giving people hope. Certainly was giving me hope that was going to hold. But Friday did look a little bit troubling, especially on the S&P 500. And it doesn't mean that we're necessarily going to be in a prolonged correction. There's still a lot of areas of support that we could hit here, but you have to be prepared for things getting worse. And this is one of the things we talked about on Friday. It's you have to kind of use the weekend when it's time to be unemotional, to kind of look at all your stuff and say, okay, if we get worse, what's going to be the first things that I'm going to be taking out? What levels? What's my exit strategy on some of these stocks? What are the things that I'd like to hold on to a little bit longer that I have more cushion on? And that's the way that we always approach things. What are our best stocks? What are our worst? When we stick with our strength.
Yeah, Scott, let's expand on that a little bit. Seeing a lot of people in the Q&A asking for more guidance on that 7 to 8% sell rule, how to interpret that with stocks that they're holding. When you see a gap down at the open, how do you handle that position in terms of scaling out, getting out, waiting, looking at an intraday chart? Help break some of that down for us.
Well, if you hit your stop, you hit your stop, whether it's 6:31 in the morning, or for us anyways, or 12:59. Now, if I own stuff on a day like today, then I usually just wait, because often you'll get, relief rally bounce like you're getting now. In fact, already you get a whoosh, and then it'll try to rally, and then this will be the key point. Can it, at least hold or stay up? If I had a bunch of stock right now and I just was way out of position, I would be selling right into this right now, at least doing something, getting in motion. If I was 80% invested and I went to 50% invested and the market roared back, so what? At least I still have the other 50%, but I would be playing defense. Now, we've been talking about the market just being stuck in the mud, whatever. David Ryan's been tweeting about it. I'm not saying that this isn't like a mini surprise, but the market being down today is not a shocker at all. IBD went to pressure yesterday, and I do a weekly video. I just went straight to red. I just said, I don't like the market. I'm just going to go straight to red. And so you should be ebbing and flowing. So hopefully everyone out there has done that and they're not getting hurt. You might be losing today, of course. If you have stocks, they're going to be down. It's just the way it goes. But, follow your rules, honor your stops. I don't care what time it is, honor your stop. Now, if you're up 25% in something and now you're up 16% in one, kind of bad open, I think then you can kind of wait. I would wait, whether it's a half hour, an hour, let the market digest, find a natural flow of buyers and sellers, and then make your decision. If your stock just seems waterlogged, then maybe you just start reducing or cutting positions.
Right. And as Justin said, rank your stocks, and the ones that you're going to be paying attention to first are going to be the ones that you're down the most on. And Ed, can we talk about the psychology a little bit more about what to do? Because I think there's also a lot of people out there that you had the knee jerk, crowd right away. And as Scott said, that's not wrong. If your stop is hit, your stop is hit. But what about the people that are kind of panic frozen, and don't want to do anything because they're in disbelief of what's happening?
Yeah, you don't want to do that. I mean, personally, just gonna wait to see. I think it's a good idea to wait a few minutes, unless you hit your stops, as Scott was saying, if you're still up a lot on some certain stocks, because the market is up off its lows. You don't know how the market is going to respond through the day, so it could get a lot better, but it might turn right around and go down. I mean, it's like after we get a few 15 minutes, 30 minutes into the trading session, we might have a better idea where we're going to go. And obviously, when you have more volatile markets go around, but ultimately you can't just tell yourself. After a while, you have to say, like, look, I'm down a lot, or I need to scale back my exposure. It's easy to get frozen and just say, like, I don't know what to do, or I'm just going to hold on and hope everything gets better. It doesn't have to get better. All those days that stocks went up 8-9%, and you go, woo, I don't know why, but I'm great. It's like, guess what? Those days can turn around and be like, it's down 15%, but why? Nice stock, there's no news. It's like, you don't need to have news on a day like today. The market's down, and you just have to realize, and we could be headed for something worse. Maybe this is the low, but we could be headed a lot worse. Your stocks could be headed a lot worse, and you have to respond to that.
Right. Justin, let's talk a little bit about hedging. I'm also seeing questions about that. And, that's something that we've been talking about in the last couple of weeks there. But how would you approach that today? Is it too late to start hedging?
It does feel a little bit late. Now, again, hopefully you aren't at a position where you're heavily exposed and feel like you're needing to hedge a lot, but and look, Eric Kroll on Friday, for those people that missed it, did give a good kind of lesson in terms of why he likes to do hedging on some of his individual stocks using puts. That's another thing that we've talked about, and we probably have in the Q&A. Of IBD Live, or FAQ, I should say. Yeah, it does feel a little late, just because a lot of times when you have a big drop like this, you can also have a bigger rebound. But you have to be prepared for things to get worse. So if you do have some stocks that you bought recently, and you're doing the stop losses on those, you're hitting the 7%, 8%, you're probably going to be raising cash there. Now, if you have some cushion on some stocks, and then you're wanting to kind of hold through, that's where I think it's a little bit more appropriate to hedge, where you're just like, okay, I don't want to get rid of these things. I don't want to panic. So the hedge just kind of stops the bleeding, kind of puts you at balance, because that hedge is going to increase if the stocks get worse, as long as you're choosing the right instrument. And if your stocks start rebounding, yes, your hedge will lose money, but it's going to kind of offset each other. And that, I think the better way to use the hedge right now is if you have stocks that you want to hold on to, that you've got a lot of cushion on, that you think are still holding up well. That could be where you use the hedge.
And Scott, I know we're spending a lot of time on the market today, but that's because, in terms of actionable stocks to buy, that's not what we want to be focusing on today. We like to stay in step with the market. That's the name of your weekly video, or one of the videos that you do, Scott, right? Stay in step with the market.
That's
right?
That's the monthly
one.
Yeah.
Yeah. So it is very important to stay in step with the market. So on that note, seeing a number of people asking us about shorting, what would you say to them in terms of, is it time to short stocks or the market?
Well, I don't like to short in the hole, so to speak. So I would never be shorting on a bad open. I would be covering my shorts if I was short, So shorting is totally different. I've been doing this a long time. I've been short, and in 2000 I was short, 2008 I was short, but I've gotten my head handed to me a couple of times being short. I was short Fannie Mae one day. It was up 20% when the government changed the rule, and it was up 20% in seconds. I would say for most people, just go about your business, try to make money on the long side, avoid the short side. Now, if you're an active investor, then the short side might be appealing, because if you trying to make a living at this, there could be periods. I lived through 2000 to 2003 where if you're trying to put food on the table, trading stocks, good luck. It's a tough go. So I have a love-hate relationship with the short side, Allie. I think it's appealing because when they go down a lot, and you make a lot in a hurry. But man, my worst days almost always it's from being caught wrong short. You're short, the market closes poorly, and then something changes the next day, and it's the biggest days in stock market history or in bear markets.
Mm-hmm.
So, and then you really want to wait for, the white of their eyes, like it's got to be broken before you start shorting. And the market is not broken. I mean, it's just barely off the highs just yet. So if this is going to be a bear market, there will be a chance to be short if you want to be short, but I don't think it's right here. You really want to let it break and then try to rally. And if it cannot rally, and then that would be the right time. So I don't think the time's right for shorting here.
Right.
Well, a lot of times on the shorting side, it's that rally that kind of hits resistance, either at the 50-day moving average line or at some level where the resistance makes sense, and then it starts rolling over. That's where we tend to like to short the most.
Yeah, I was just trying to pull up an example. So I'm going to go over, let's take a look at MarketSmith now, shall we? So here, is this potentially an example where, you see that resistance at a declining 50-day?
Perfect.
Yeah.
Mm-hmm.
This is an absolute textbook short. So you're in a bull market, it runs from 80 to 100 and change, and then it just cascades, waterfalls. And it's tempting to be short like that, but you really want to let it try to rally. And you can see it goes from 80 to, maybe, 89 or something. And then it just can't go up, right? A number of weeks where the 10 week is rolling over, and what was the floor becomes the ceiling, right? And here's the 10 week and it just can't get above that. And so that's how you would short. And then you would cover bad breaks. In the short side, I'm always of the opinion, try to just make a little bit. If I can just make a little bit being short, awesome. I don't think you want to try to get rich being short. That's a mug's game. Wait for the bull market, and try to get rich doing that. But if you want to stay engaged, and I'm the worst, I'm always in. I never get out of the market. I don't know why, I just can't. So I always have something on. So I've been short throughout my career, and in 2000 I did extremely well. In 07, 08, I did really well. But I'll be honest with you, in 09, I did not do that well. And it's because I'd been short for so long. I had a bear market mentality, and I just didn't see the change of trend in the market in 09. It took me, I really flubbed 09, and that was a fantastic opportunity. So I don't know. I think back, and I'm curious if it was worth it. The money that I might have made in 07, 08 may have been peanuts compared to what I would have made in 09 if I had that correct mentality.
Mm-hmm. Yeah. And Lavana in our audience is saying, why would anyone go short until they take IBD's shorting course? I see you, Lavana. I like that. So yeah, we do have a lot of online courses, including one that's all about shorting. So highly recommend you all checking that out if that is a strategy that you are interested in. Now, Ed, We also have to do scenario analysis, right? We can't just be all doom and gloom. So how do you approach the market in terms of going through that different scenario analysis?
I mean, well, you should try to have a little bit of a game plan. We're sort of at a turning point. Maybe this will end up being the bottom. Let's just throw that out hypothetically.
Absolutely. Mm-hmm.
And I don't know where I'd be buying, but at some point you'd be looking around for things that are pulling back and, maybe bouncing back. I would like to see, at least the NASDAQ back above its 50-day line at that point, just because you're talking about shorting. It could be that the NASDAQ comes right up to the 50-day line and then reverses. That would not be a shocker either. So while we're coming off those lows, I'd like to see that. But if we rebound nicely today or whenever it does, there might be a lot of buying opportunities, and so you have to be there. But it could be that in this kind of market, it could be that you get bearish in the morning and then you're bullish in the afternoon, and neither one of those attitudes is negative. So you might end up, as Scott saying, you might have to sell stuff now, and then later on there's opportunities today down the road that you buy, but you have to be flexible. Around these levels, we're at levels where you might be saying you need to sell, or you might be opportunities to buy. And it's like, it's a thin line. It's sort of like, if you get that field goal, it's the difference between winning or losing. Okay. And it's like, sometimes you're right on that line. And right now we seem to be a little below it, but it wouldn't be much to go back above it.
Yeah, speaking of SMU's game, I don't know if anyone, I know it's not one of the biggest teams out there, but I don't know if anyone saw that on Saturday. We were losing, and then literally last second Hail Mary to win the game. Pretty awesome. All right, now let's go ahead and take a look.
Things didn't go so hot for UCLA.
My condolences. I'm sorry. So sorry to hear that, Justin. Okay, well, let's take a look at Nucor, because steel stocks not having a good day, although Nucor off lows, still down over 6%. Justin, give us your assessment. This is not where we want to be right now.
Right. And what I was going to say on this is that, for as much as we talk about, kind of buying on the pullbacks and stuff like that, I have to say, this is why I always have to wait for that strength. I just can't bring myself to buy into the weakness. Again, Charles Harris is good at it. He has his exit strategy, and he knows how far he's going to let something in. But look, this is something that I was looking at a lot of the steel stocks as they got back above the 50-day moving average line on Wednesday, with the market rebounding. It looked to me like, hey, this kind of basically came down to the prior area of its base, roughly. It was right around there, so it seemed like a good area of support. But Friday's action, again, when you start undercutting, the reversal, you start undercutting those lows. Again, if this is something that you had just bought, and again, I was trying some of the steel stocks, but you just have to get out. And so I think Friday was a very clear case where that was telling you, hey, this isn't ready yet. This might need some more time. And of course, I did not know that this was coming, the gap down today, but that's the benefit of kind of acting on signals and having that exit strategy to keep the loss small. That's how you avoid getting into trouble like this. So sometimes the best way to avoid these gap downs is to make sure that you were sticking to your sell rules ahead of time. Now, if we just go back to the Qs real quick,
Sure.
One thing I'll say on the Qs is, again, it's good to look at these areas of potential support. And while the lines are kind of a good starting point, you've got the 50-day moving average line and the 21-day moving average line. One of the things that it seems like this 50-day moving average line is right around a level of support here. So we've dipped below that. And now the question is, hey, can we get back above that? Is this just a temporary test? Because you see that all the time with the 50-day moving average line, or these levels of support. Is it a test where it just comes down very quickly and then snaps right back? Again, we had this very strong buy on the dip mentality. So in the same way that we're looking at Nucor, look, it kind of broke that level of support and just wasn't, the support wasn't coming in. With the NASDAQ, I think the jury is still out here. You know, so again, you have to kind of look at it both ways. As Ed said, look, this could be the bottom right here. This could be as bad as it gets until the next time we have a pullback. So you have to be ready for that, but you also have to be, this is where I start setting, you know, lines at the lows of the day to let me know, okay, look, if we roll over from here, do I need to do a little bit more selling? And the first things that are going to go are the things that I've bought recently. And that's why, you know, some of the steel stocks that I bought recently last week, they were the first things to go on Friday. Actually, some of them even before that, because again, they just didn't, they didn't have the follow through, and they weren't reversing properly.
Okay, Scott, let's take a look at DLO, the recent IPO that you wanted to talk about. So right now, even though the stock is down almost 5%, we're seeing a bit of support around the 60 level, and it's trying to hold that 21-day.
Yeah, it undercut that low at 60. It was like a whoosh. There was a vacuum. It went from 60 to 58.11 in seconds, which is what I expected, because there's probably a lot of stops in there. And then it was 58 to 61 in seconds, which is why everyone hates having stops, right? But I already bought it today. I didn't get 58.11, unfortunately, but I bought when it broke 60. Then that was my cue to